with one piece of news to address is that the Reserve Bank of India has clarified that there will be no relaxation of listing and promoter shareholding timelines for small finance banks. Small finance banks must list separately within 3 years of commencing operations, while promoter shareholding in the bank must be maintained at a minimum of 40% for the 5 years period. This means Ujjivan Small Finance Bank must be listed separately by the 31st of January 2020, and Equitas Small Finance Bank must be listed by 4th of September 2019. Are the lenders on track for the listing with such a short period of time? Let's ask the respective managements, Mr. P. and Vasudevan, the MD and CEO at Equitas Holdings, and Mr. Ittira, the MD and CEO at Ujjivan Financial Services, both of them joining us on the show right now. I'll start off with you, Mr. Davis. Obviously, this is not a new announcement. This is just a reiteration from the RBI. So I believe that you should probably be well prepared and braced for this sort of a listing that you are expected to do for your small finance business.
Good morning. Yeah, this is one of the things that was on the cards. We had approached the RBI because we already have, through the holding company, which is a special purpose holding company with only the bank as the operating company. We already have 80,000 shareholders in the holding company. So we felt that in the interest of the shareholders, we should approach RBI to see whether they could give us an approval to move this to 5 years or 3 years, as the case may be. Now, since that has not happened and they have come back and asked us to follow the guidelines which was issued in November 2014, we are working with our advisors to make that happen within the time frame that has been prescribed.
So what's on the table in terms of the route that you will take to go ahead and list this company, and what is in it for the shareholders?
Yeah, protecting the interests of the shareholders is very important, and one of the options which we have considered and which we are working on is to give some of the shares, 60% of the shares of the bank, to the existing shareholders, and that mechanism is being worked out by our legal advisors and our tax consultants.
Mr. Vasudevan, good morning. Neeraj here. I see that you've said that you guys are going to meet, or the board is going to meet on November 1st to consider the further steps. Any inkling of what these steps could be like or what would be on the table?
Good morning. So, yeah, so as Ujjivan people are also explaining, basically, the guidelines are there from the beginning, so we are just required to comply with the guidelines. And we went to RBI well in advance just to see whether there's a way of collapsing the holding company and the bank, in advance of the 5-year lock-in. But of course, RBI has said that we need to comply with the guidelines, and such merger is not possible within the 5-year period. So we have, both of us actually, we have sufficient time. And there are two routes to list, the shares of any entity. One is through an IPO, and second is through a, reconstruction arrangement under the Companies Act. So there are two routes. So we'll be considering the two, and we'll have to see which is the route which looks appropriate in our case, which will be decided at the board meeting.
Mr. Vasudevan, I think from a shareholder, individual shareholder perspective, whether institutional or retail, the only question that would come to mind is that everybody was working with, and investors that we have invested in your stocks have been working with the fact that the basic premise was that despite these guidelines, there will be a merged entity structure in place. Now that that is at risk, would whichever option you take entail the existing shareholders holding, let's say, 100 shares of Equitas, getting 100 shares in the small finance bank?
Actually, in our cases, the holding company is actually nothing but just holding the bank shares. It's not doing any activity of its own. To that extent, if you look at, for example, our financials, the bank financials represents almost like 98-99% of the consolidated financials at the holding company level. So practically, it's actually the one and the same entity. So whether you have shares in the bank or in the holdco, ideally, you are actually holding the value of the bank's, entity. So that's how it is. So when there is as I said earlier, there are two ways of listing any shares of a company. One is doing an IPO directly in that entity which wants to get the shares listed. The other is through an arrangement Like in that arrangement, of course, you could give shares of the bank to the shareholders of the holding company, and how much we can't give 100% because the holding company is required to hold at least 40% of the bank for a minimum period of 5-year lock-in. So that is a given. So which means that the balance 60% of the shares can be probably given. So that's the maximum. I'm not saying that we are going to give 60, but the maximum of 60% of the shares could be given of the bank to the shareholders of the holding company if we choose to take this arrangement route. So these are the things which will be, discussed, and we'll have to see which is the best for all stakeholders concerned, and appropriate decisions will need to be taken.
Mr. Davis, just to go by your press release, there was some bit of clarification regarding the exit of promoters wholly, and whether at the time of this listing, the RBI and in accordance with the SEBI guidelines would take a call then. So is there a possibility of a complete exit?
The possibility exists if that is the best route to be taken. So after the listing of the bank and closer to the 5-year period where the 40% is required, we will approach the RBI. At that point in time, whatever is the best alternative, we will take it forward on that basis. Because at the end of the day, the promoter is a holding company, so it's not a group or an individual or anything of that nature. So it is a very professionally run organization. So I think, in the context of where we are coming from, this is a possibility that we will look at closer to the 5-year period before January 2022.
All right. Mr. Vasudevan, in your case, you said you may also consider an IPO, and you said that, holding shareholders in the current listed entity are any which ways playing on the earnings of the small finance business, that's the bank. So in light of that, wouldn't an allocation of shares to them be more fair than an IPO route, which requires them to then reapply to the other entity that's going to be listed?
Yeah, I mean, obviously that looks like a better option from the shareholders of the holding company perspective. So we will be, looking at it, and obviously the decisions will be something which will be beneficial to all the stakeholders. And at the end of 5 years, in our case, we are actually quite clear that the holding company will not really get into any new lines of business. So its job is only to hold the shares of the bank for the 5-year lock-in period. And we don't really plan to do any other business in the holding company. So as soon as the RBI guidelines, which is at the end of 5 years, permits us to seek an approval to merge the two entities, as and when that time lapses, then again we'll be going back to RBI to see whether they will approve to merge the two entities. So the entire two shares of the bank and the holding company being listed is for a period of time till we get RBI approval to merge, because we really don't intend to do any additional or new lines of business in the holding company to make it as a separate entity on its own.
That's fair clarification. Mr. Davis, one question to you, and a problem that the Bandhan Bank promoters face right now as well, that post the listing, and hypothetically if you dilute 10-20% in the IPO for the SFB, in over 2 years, or at least in the maximum of 2 years time, you have to dilute your stake further to the tune of 30-40% additional. And that becomes a sticky problem for anybody who's holding shares in that company too.
Are you talking about the promoters, or you're talking about
promoters?
Shareholders? So the promoters, the first step is the 60%, and then we have, if as Mr. Vasudevan also mentioned about the reverse merger of the two entities. That is the ideal route, because obviously we already have shareholders in the holding company, and collapsing the bank and making it into one single entity, since it's only a special purpose single operating company entity, would be the ideal route. So there is no, there's no periodic reduction of shareholding which comes as we go along. So it's between year 3 and year 5 that we have to bridge the gap.
Just one last question, Mr. Vasudevan. What is, you said that you're going to be approaching the RBI as time comes, for them to approve the merger of the two. What's the likelihood of that going through? If you already have a notice from them stating that you have to separate the two and list it, so what is the probability of them going ahead then and saying that, okay, go ahead and merge it?
Well, we can't, obviously I cannot predict future approvals.
Why would you think that, this is a possibility and they would let you do that?
But it's not a deviation approval that it will arise. Right now when we sought RBI approval to see whether they will permit us to merge within this 5 years, that was actually a deviation request that we were making to RBI, because as per guidelines, we got to have the holding company as a separate entity for a minimum period of 5 years, holding at least 40%. That's the guideline requirement. So we were actually seeing whether there is a possibility of getting a deviation approval, which did not come through. But at the end of 5 years, once the lock-in period of the promoters is over, it's not so much a deviation approval, but more an approval based on the regulatory comfort on Equitas Bank. So it's a very much more of an entity-dependent decision. And so that's something that, obviously I can't predict, but that's something that we'll have to hope that we continue to be a very high governance bank, that the approval should come through.
Mr. Davis, just a follow-up. One last question on this conversation, Mr. Vasudevan and Mr. Davis, but the question is to you, Mr. Davis. Hypothetically, if the answer from the Reserve Bank is a no and you have to go ahead for an IPO, let's work with that possibility. Would a company like you dilute 10-20% or would you dilute the entire 60% in one go? Because if you dilute the 10-20%, then the norm comes in, right? Because 2 years from the date of these listings, as I read a couple of notes, the holdco shareholdings in the SFBs have to be cut to 40%.
Yeah, 40% is the minimum requirement.
Right.
To be held for up to 5 years. So it's a question of you can have more than 40%, but you can't go below 40%.
Oh, you are saying that even if you do only even if you dilute only 10 to 20% in the IPOs, you do not have to go out and sell another 40 or 50% in the banks in the next 2 years.
For the next 2 years, yes.
After the listing.
So it's a minimum that you have to hold 40%, at least 40%.
Okay, Mr. Davis, Mr. Vasudevan, thank you so much, gentlemen, for joining in today and giving us that perspective. All the best with your applications to the Reserve Bank of India.